Be honest. Have you ever watched your trading account blow up just because of one emotional decision? I have. One trade, one click. And within minutes, everything I earned that entire week was gone. In that moment, I wasn't trading anymore. I was fighting the market. I was holding losing trades, FOMOing into new ones, trying desperately to win it all back. And you already know how that ends. That's when I realized the biggest enemy in trading isn't the market. It's your own emotions. If you've ever felt angry, panicked, or hopeless staring at a bleeding chart, this video is for you. Because today, I'm going to share 6 powerful ways to control your trading psychology in the Forex market. Lessons I learned the hard way, through real losses and sleepless nights. It may sound simple, but trust me, it can change the way you trade forever. Controlling your trading psychology is one of the most important skills in financial investing, especially in Forex. The longer you've been in this market, the more you'll realize how critical it truly is. Almost everyone who trades knows they need to control their emotions. We all understand how important it is, but knowing is one thing and doing it is another. You might have knowledge, but that's not enough. You might have experience, still not enough. You also need the skill of managing your emotions while trading. Emotional control is essential for success in Forex trading. If intelligence alone were enough, everyone would already be rich. There were times when I traded diligently, earning small profits every day, only to lose everything overnight, sometimes with just one single trade. After those experiences, I wasn't even scared. On the contrary, I wanted to fight the market itself. You can probably guess how that ended. I'd stare at the screen for hours, watching my open trades tick up and down, my heartbeat racing with every fluctuation in profit and loss. It didn't just affect my performance, it affected my job, my health, and my personal life. There were countless nights I stayed up until morning just to catch a late-night FED report. And when nothing special happened, I'd start hunting for another trade right away. It was a long, exhausting period where I felt completely drained and lost. When luck was on my side, I'd win a few trades and feel amazing. But when I hit a losing streak, I'd become stressed, irritable, and emotionally unstable. Eventually, I realized that if I wanted to survive in this brutal market, I needed to learn how to control my emotions, to stop making impulsive trades I'd regret later. So I started writing reminders on sticky notes and placing them right on my screen. Rules you must follow to control your emotions. If that sounds like something you struggle with too, this video is for you. I've applied these methods myself and experienced real positive change, so here's what I learned. So here's 1. Stop trading after a losing streak. This is one of the most effective ways to stabilize your emotions in Forex. It helps calm you down and reset your mindset. Every trader, even the most experienced, has gone through losing streaks. Why? Because Forex trading is a game of probability. You could have a strategy with an 80% win rate that's proven over time. But that doesn't mean you'll never have 5, 10, or even 15 losing trades in a row. That doesn't mean your system is bad. Sometimes you're just unlucky. Just kidding. Seriously though, an 80% win rate means that out of 100 trades, you'll lose around 20. But you never know where those 20 losing trades will appear. Markets go through different phases. There will always be times when the market conditions simply don't favor your strategy, and you'll face multiple consecutive losses. We're only human. When that happens, it's almost impossible to stay calm. We just want to make back what we've lost immediately. That's when emotions start taking over. Logic disappears, and you start revenge trading. You enter trades that don't meet your system's criteria. You even increase your lot size thinking you'll win it all back. But that only leads to more mistakes and more losses. Before you know it, your account is gone. So when you're facing a losing streak, look at that sticky note on your screen and remind yourself, stop trading immediately, step away from the charts, go for a walk, Don't even turn your computer back on until you feel calm again. 2. Limit your trading after a winning streak. Yes, you heard that right. Even winning too much can be dangerous. When you hit a winning streak, it feels great. You start feeling unstoppable, like you've mastered the market. But that's exactly when overconfidence sneaks in. You start increasing your position size. Just a little at first, then a bit more, thinking, why not? I can't lose. But the market always humbles you. I remember those moments clearly. I was euphoric after several winning trades in a row, convinced I had the perfect system, so I decided to go big. Just this once. Then the market turned against me. I moved my stop loss a bit further, then a bit more, until eventually I removed it altogether. By the time I finally cut the loss, my account was almost wiped out, all because of one bad trade. As the saying goes, 3 years to build a pile of firewood, 1 hour to burn it down. All my previous profits, gone. That's why when you're on a winning streak, you must become more cautious, not more aggressive. If you've already hit your profit goals, reduce your position size. Protect what you've earned. If you keep winning, great. If you start losing, you've already minimized the damage. Always remember, don't let excitement take control after winning. Overconfidence is one of the deadliest traps in Forex. 3. Avoid trading in unfavorable market conditions. There's an old saying, avoiding the elephant doesn't make you a coward. In trading terms, if it's too hard, skip it. That's exactly how you should treat the market. Don't force trades during messy, unpredictable conditions, especially when there's high volatility due to political or economic events. If you can't clearly read the trend, or if there's big news you don't understand, simply sit out. Wait until the storm passes. As Warren Buffett famously said, I don't look to jump over 7-foot hurdles, I look for 1-foot bars I can step over. In other words, choose your battles wisely. 4. Stop staring at the screen. This is one of the most harmful habits among Forex traders, especially beginners. Most people can't resist watching their trades from the moment they open until they close. It's psychological. Once you make a decision, you naturally want to monitor it. When I first started trading, I was exactly like that. I'd stay up until 4 or 5 a.m., constantly checking charts on my phone. If a trade was in profit, I'd sleep better. If it was losing, I couldn't sleep at all. Unless you have Alice Cullen's ability to see the future, you're probably doing the same. But does constantly watching your trade really help you trade better? Absolutely not. There are rare cases where you should intervene, like closing early before major news or adjusting stop loss to secure profits. But most of the time, staring at the screen only increases anxiety. The more you watch the price move, the more impatient you become. You start feeling like you have to do something, anything, even if it's irrational. That's when you start closing early or moving your stop loss further away. And while taking profit early might occasionally make sense, moving your stop loss? That's almost always a huge mistake. Even if luck saves you a few times, eventually one wrong move will wipe out everything you've built. So stop staring at the screen. Once you've set your stop loss SL and take profit TP, walk away, go outside, hit the gym, let the market do its job. Again. 5. Optimize your trading system. You might wonder, what does improving your trading system have to do with controlling emotions? Everything. The better your system, the more confidence you have. Think of it like driving a car. When you're a beginner, you drive slowly and carefully, but as your skills improve, you become more relaxed, even at higher speeds. It's the same in trading. A well-optimized system helps you anticipate market behavior and handle different scenarios calmly. On the other hand, a poor system with a low win rate will constantly test your nerves. You'll doubt your entries, second-guess your exits, and stress over every loss. That's why continuously backtesting, recording results, and improving your strategy is essential. The more you refine your system, the easier it becomes to stay emotionally stable. 6. Strictly manage your capital. If you have a $1,000 account, losing $20 won't bother you. But losing $200? That's a different story. When you risk too much on a single trade, you can't relax. You'll constantly check your screen, your heart racing with every tick. That's exactly why emotional control disappears. But if you reduce your position size and set a proper stop loss, you'll be surprised how peaceful trading can be. Most professional traders risk no more than 2% per trade. Major funds often risk less than 1%. Here's why that matters. If you risk 10% per trade and face a 20-trade losing streak, your $20,000 account will drop to about $3,000, an 85% loss. But if you risk only 2% per trade after the same streak, you'd still have around $14,000, only a 30% loss. That's a massive difference. Now, here's the painful truth. If you lose 85% of your account, you'll need a 566% gain just to break even. Unrealistic, right? So always focus on capital preservation first, just as Warren Buffett said. Rule number 1. 1. Never lose money. Rule number 2. Never forget rule number 1. Combine a solid trading system with strict risk management, and your emotions will naturally become calmer because you'll know that even in the worst-case scenario, you're still safe. Final thoughts. The market doesn't destroy traders. Their emotions do. If you want to survive and grow in Forex, you must first learn to control your own mind before trying to control the market. Don't let temporary emotions ruin your long-term goals. Don't let one bad trade define your entire trading journey. Every great trader you admire today has been through losses, pain, and self-doubt. But they all learned one thing. Discipline and emotional control are your strongest weapons. So from today, make a promise to yourself. Trade calmly, trade smart, and never trade with emotions again. Forex trading is a long journey. There's no guaranteed path to success. We all have to learn, grow, and improve day by day. These are the 6 methods I've personally used to regain emotional control, lessons learned through real experience and painful mistakes. They worked for me, and I believe they'll help you too. If you found this helpful, leave a comment below. And if you have any questions, don't hesitate to ask. I'm always here to listen and share more. If this video inspired you, leave a comment below and write mindset. That's how I'll know you're serious about mastering your emotions and becoming a professional trader. Don't forget to hit that subscribe button, because in the next video, I'll reveal the 3 deadly psychological mistakes that make traders lose everything. Thanks for watching. Stay disciplined, stay focused, and may your next trade be your best one yet.